A quick note. This episode is for general informational purposes only. It's designed to give you a clearer picture of how expense tracking works for real estate agents and how to think about it in your business. But every situation is different. Tax laws change, individual circumstances vary. So before making any financial or tax decisions, it's important to consult with a qualified tax professional who can give you advice tailored to your specific situation. Think of this as a guide, not a substitute for expert counsel. What if the thing quietly draining your business isn't your marketing budget or your commission splits, but the way you're tracking your expenses? Because for most real estate agents, the money isn't lost in one big mistake. It disappears slowly, mile by mile, receipt by receipt, missed deduction by missed deduction. And here's the part that stings a little. A lot of it is completely avoidable. Today we're talking about something that doesn't get the spotlight, but probably should. Expense tracking. Not the boring version, the version that actually puts money back in your pocket, gives you clarity, and makes tax season feel a whole lot less like a gamble. Let's start with a simple truth. Most real estate agents are self-employed. That means you're not just selling homes, you're running a business. And that business lives and dies by how well you understand your numbers. But here's where things get messy. You're driving all day. You're paying for marketing. You're buying closing gifts. You're staging homes. You're grabbing coffee with clients. And somewhere in the middle of all that, you tell yourself, I'll track it later. And later never really comes. So what actually counts as an expense? Let's make this real. Marketing and advertising, your ads, your flyers, your business cards, fully deductible. Vehicle and mileage, often your biggest cost and one of your biggest deductions. Home office, if you've got a dedicated space, that counts. Education and training, courses, certifications, conferences. Brokerage fees, insurance like errors and omissions. Office supplies, travel, even staging a home, furniture rental, cleaning, prep work. All of it adds up. And all of it can reduce your taxable income if you track it. This matters because every dollar you don't track is a dollar you might overpay in taxes. Now here's where most agents go wrong. They treat expense tracking like a once-a-year event. They wait until tax season, open a shoebox, scroll through bank statements, try to piece together a year's worth of decisions, and hope they didn't miss anything. But the agents who run this like a business, they do something different. They track in real time. There are a few ways to do this. At the simplest level, you can use a spreadsheet. In fact, a customized spreadsheet modeled after Schedule C, the same form you'll file with your taxes, can give you a clean, organized view of your expenses. It works. It's cheap. It's straightforward. But it requires discipline. Then there are apps. Tools like Hurdler, Expensify, or QuickBooks Solopreneur automatically log expenses, track mileage, and scan receipts. And that last part, scanning receipts immediately, that's not just a convenience, that's protection. Because receipts fade, they get lost, they disappear right when you need them most. And if you've ever had to defend a deduction, you know how important that documentation is. Now let's talk about something small that makes a massive difference. Separate your money. A dedicated business checking account, a dedicated business credit card. That one move alone simplifies everything. No guessing, no mixing personal and business expenses, no digging through transactions trying to remember, was that lunch a client meeting or just Tuesday? It's clean, it's trackable, it's defensible. So far we've learned this. Tracking expenses isn't just about organization, it's about strategy. Because when you track consistently, something interesting happens. You start to see patterns. You see where your money is going. You see what's actually driving results. You see where you're overspending and where you're underinvesting. And that's when expense tracking shifts from a chore to a decision-making tool. Let's zoom in on one category for a second, driving. For most agents, this is the biggest deductible expense, but it's also the easiest to underreport. Because if you're not logging mileage automatically, you're guessing, and guessing costs you money. This is why automatic mileage tracking through an app isn't just helpful, it's essential. Now, let's talk about rhythm. The agents who do this well don't just track, they review. Weekly, monthly, quarterly. They reconcile their numbers, they check for missing entries, they compare spending against their goals, and they adjust. Because a business you don't review is a business you're running blind. There's another layer here most people overlook: taxes. As a self-employed agent, you're responsible for quarterly estimated tax payments. You'll receive 1099-NEC forms from your brokerages. You'll file using Schedule C. And if you're not tracking throughout the year, you're not just making tax season harder, you're increasing the chances you'll overpay or worse, underpay and face penalties. This is where a tax calendar comes in. Mark your deadlines, know your obligations, stay ahead of it. And at a certain point, usually when your net income starts pushing past around $75,000, there's another decision worth exploring: switching to an S corporation. It's not right for everyone, but for the right agent, it can create meaningful tax savings. This is where a tax professional becomes more than helpful. They become a partner in your business. Let's pause for a second, because all of this, apps, spreadsheets, categories, tax strategies, it can feel like a lot. But underneath it, there's a simple idea. You're building a system that captures every dollar going out so you can keep more of what's coming in. And maybe the most overlooked benefit of all? Peace of mind. When your records are clean, your receipts are stored, your accounts are separated, your numbers are up to date, you don't dread tax season. You don't scramble. You don't guess. You know. If you want to run a smarter real estate business, start here. Track every expense in real time. Use tools that automate the process. Separate your finances. Review your numbers regularly. Keep every receipt. And don't wait until April to figure out what happened last year. Because the agents who win long-term aren't just great at closing deals. They're great at keeping what they earn. And that difference? It's built one expense at a time.